All right. So what do you see on the screen? Anyone? Can anyone tell me? What do you see? So look at this.
Airplane, miss.
I'm a Mr. Not Miss.
Mr. Not Miss.
It's Mr. All right. So, okay. The 3 slides. This first 3 slides. What do you see? So the first one, you mentioned the outside of an aircraft. Then what else? What else do you see in the next 2 slides?
Chairs.
What chairs are there? Just random chairs, like in the hall or in a classroom. Hmm? So what is this? Where are these chairs or seats?
The seats are in the aeroplane.
Inside an aeroplane. And then the last one, the last image. What is that?
The engine.
An engine. Exactly. All right. So all of these are parts of a plane, but they are separate parts of a plane. And the reason that I've showed you separate parts of a plane is that in today's class, we're going to look at components. All right. So what are the learning outcomes for this unit? You have to be able to account for property, plant, and equipment components. You need to account for major inspections, and then you need to subsequently recognize items of PPE, whereby you need to be able to distinguish between capital and revenue expenditure. So let us look first of all at components. The cost of major components should be identified separately so that they may be depreciated separately over the appropriate useful life. So I showed you an image of an aircraft, all right? So the aircraft may have the body of the plane, the exterior of the plane, right? Then that can be a separate component. Then you have the interior, the seats, all right, maybe the cabins in the plane as well. And then you have engines. So these are different components that make up an aircraft. Now, these components may have different useful lives. And because they have different useful lives, they may need to be depreciated separately. So for example, like the seats of an aircraft, because so many passengers come in and out of an aircraft every day, the seats may be subject to more wear and tear than the exterior of the plane. Okay, so the seats might have to be replaced more frequently than the entire body of the plane, right? So the seats will have a different useful life. The same may be with the engine. The engine may have a different useful life to the body of the plane. So major components should be identified separately so that they can be depreciated separately. So we don't look at all components of assets. We look at major components. Only major components should be identified separately. If they have different useful lives, then they may be depreciated over their separate useful lives. So, for example, we were looking at an aircraft, and I mentioned that an aircraft has some components. We have the frame, all right, which is the exterior body. We have engines and we have seats. All right, so those are different components of an aircraft, or those are the major components of an aircraft that may need to be depreciated separately. So we'll look at this example, example 1. It's always, learning process always facilitated by dealing with doing examples, and I expect participation when we're actually dealing with these examples. So we have Whoosh Limited bought a ship for 1 million in cash on 30 June 20X1. It has 3 parts. It has the engine and it has the hull. You can consider the hull the body, and it has various other moving and non-moving parts, which individually are insignificant, but together they are a major component. All right. So on 30 June 20X1, the total and other PPE had a carrying amount of 3 million. So they had 3 million worth of property, plant, and equipment. All right. That's the total other PPE, which had a carrying amount of 3 million. Now it tells you, show the journal entry to record the purchase of the ship. Show the journal entry to record the purchase of the ship. Can anyone help with that one? Show the journal entry to record the purchase of the ship. This one you don't even need to do any calculations because you're already given the figures. So all you need to do is to provide the journal entry. So journal entry, what account is going to be debited and what account should be credited. All right. Can anyone help me with that?
The ship will be debited and cash will be credited.
Just like that.
With
Are
3
you going
million.
to, are you going to,
No, with 1 million, sorry.
okay, are you going to split the parts? Are you going to split any of the parts of the ship? Or are you going to debit the whole 1 million to the ship? Hmm?
Say, I think you debit the whole 1 million because if you split it, then I mean the engine and hull, you only need those amounts to depreciate it.
You only need those amounts to depreciate. All right. So you were just saying that you should just debit the whole ship and then credit the bank. Okay. Does anyone else have another opinion, or do you agree? Let us look at the solution. So we do debit the ship, but the individual parts should be shown separately because they're major components and they have different useful lives. So we credit bank since we were told that it was bought by cash. All right, so we can credit our bank with 1 million. Then we debit the ship, but the engine, so the engine component, we debit the ship, the hull, and then we debit the ship, which are the other parts. So all of those 3 major components are shown separately, and we credit the bank the payment 1 million. All right, so that is the solution. Are there any questions? No questions? So it tells us that on 30 June, yes, go ahead.
My network was clipping. I didn't hear anything.
All right. I cannot be repeating all the time. I'll just repeat now. If you have problems like this in future again, then you can just watch the recording. So I say that you're going to debit the different components of the ship. So you're going to debit the ship, the engine component with 300,000. You're going to debit the ship, the hull component with 500,000, and then you're going to debit the ship. These are other components with 200,000, and then you're going to credit that was paid.
Thank you, sir.
Then the second part of the question, all right. The second part of the question says present the ship in the detailed statement of financial position on the date of acquisition. So the date of acquisition, of this ship was 30 June 20X1. So it tells you to present the ship in the detailed statement of financial position on the date of acquisition. How will you record that? How will the ship be recorded? In the statement of financial position on the date of acquisition. Anyone? No one? I just want to bring your attention to something. This page numbers for gripping up. If you have a different version of the book, the significant components will be on a different page. So you just have to go to the part where they talk about significant parts. Right, you just have to go to the part where it talks about significant parts. I'm not so sure. I will update the slide with the 2020, or the 2020 edition with the page numbers there. Okay, so the property, plant and equipment was purchased on the 30th of June. So on the 30th of June, it told us, if we come here, it told us on 30 June 20X1, the total other PPE had a carrying amount of 3 million. And then obviously we bought the ship for 1 million. So if we're to present it in the statement of financial position, we're going to have non-current assets, right, on 30 June 20X1, the end of the financial year. Then we're going to have our line item, property, plant and equipment. So please do not abbreviate. This was just for the sake of saving space in this example, but you will write property, plant and equipment. And the total value of your property, plant and equipment will be shown as 4 million. So you will not show the individual components separately. You just present the carrying amount in the statement of financial position. You show PPE as one line item. So you're going to add all your PPE together and show it as one line item. It's only in the notes to the financial statement where you have your PPE note. You did the PPE note in Financial Accounting 101, where you're going to break it down. So you might have furniture, vehicles, ships, aircraft. Those are separate categories that you're going to do. You will show in your PPE note. Then you're going to add the carrying amounts of all those assets, and you're going to show that as one line item in the statement of financial position under property, plant and equipment as a non-current asset. Is that clear?
Yes, sir.
Great.
Yes.
Okay. And so now let us look at the replacement of major components. So major components may need to be replaced at regular intervals. I gave you the example of the seats of the aircraft. For example, I said that because of the wear and tear, you might have to change those maybe after every 3 years or after every 5 years, you're going to have to replace those seats of an aircraft. So what happens? The cost of the new component must be capitalized to the asset, while at the same time the old component is derecognized. So you have to remove the old cost or carrying amount, right? Cost minus accumulated depreciation. You have to remove that from the carrying amount, and then you're going to add the value of the new seats to the aircraft. So you're going to capitalize that new cost. When the carrying amount, where the carrying amount of the old component is undeterminable, for instance, where it was not depreciated separately, the cost of the new component can be used to give an indication of what the cost of the old component was. So if, for example, that ship that we recorded in the books, if at the beginning you had not recorded the engine, the hull, and the other parts separately, and you don't know what the cost of the old component. So, for example, you're replacing what components did we have? So let's say you're replacing the engine, for instance, right? You're replacing the engine of that ship. But when you initially recorded the amount, you just recorded the ship at a value of 1 million. You didn't split the components. So once you replace once you get a new engine, the new engine, you can use that cost as an estimate of what the carrying amount of the old component would be. And that is because you would use the value of the new component and you're going to depreciate it or estimate what the depreciation would have been on the old component. And we'll deal with an example. We'll deal with an example to actually illustrate that concept. Okay. But before we deal with that, let us look at this example. On 1st of January 20X1, a plant was purchased. The purchase price was 1 million and there were no significant parts identified. So the cost of the plant was 1,000, not 1 million. The purchase price was 1,000 in cash. There were no significant parts identified. The estimated useful life on 1 January 20X1 is 10 years. Now, what happened was that the engine of the plant seized up. It was scrapped and replaced on 1st of January 20X2. So 1 year afterwards, the engine of the plant seized up, all right? And the new engine was installed on the same day at a cost of 500 cash. The estimated useful life of the new engine is 5 years. Now you're given a sentence there that is highlighted in old. The cost of the old engine when originally purchased as part of the plant is estimated to be 300. All right. So you are required to show the journals in 20X2. You are supposed to show the journal entries for 20X2. How would you do this? What would you do? Let us concentrate perhaps on the first part without looking at the engine. Sorry. So without looking at the engine, let's just look at the old plant. So we're not going to look at the required and look at 20X2. Let's look at 20X1. What would be the journal entry on 1st of January 20X1? On 1st of January 20X1, what would be the journal entry? What would have been the journal entry? on 1st of January 20X1?
Debit PPE and credit cash.
Debit PPE, credit cash. All right, that's 100% correct. But remember, PPE is a broad category that encompasses a lot of different assets. So you're going to have to say, what asset is it? What asset is this?
Plant.
It's a plant. Exactly. All right. So let me just share. I want to do this in Microsoft Excel. Okay. So this is what you would do. You debit. Let me put the debit here. I'm sure you can see my Excel now. Credit. Okay. So you're going to debit your plant. It's an item of PPE. It goes into the statement of financial position. This is on 1 January. Let us just say 20. Let's say 2001. Just says 20X1. Okay. Maybe. Okay. Not P, but PPE. All right. So I debit my PPE, which is an asset, appears in the statement of financial position. The amount is 1,000, and I'll credit my bank. I'll just credit the bank with 1,000. And then your narration, acquisition of plant. Okay. So let us deal with the 31 December 2001, 20X1. What would be the journal entry on 31 December 20X1? Let us go back to the question. Okay, I'll just share the whole entire screen. So let's go back to the question. If you look at the question, what would we have to do at the end of the year 20X1? What would we have to do? Anyone, if you're in the library or somewhere, if you don't have a mic and you want to contribute, you can also always answer in the chat. Okay, so what would we have to do on 31 December 20X1? What are we going to account for?
The depreciation, I think.
Depreciation, exactly. All right. So what would be the journal entry on 31 December 20X1? Remember, we're not dealing with 20X2 yet. All right. So this is a requirement that I added, right? It's just said, let us start with 20X1. I want you to have the full picture before we go on and deal with 20X2. So what would be, what's the journal entry on 31 December 20X1? You should be able to do this easily. This information is important. Yes.
We debit depreciation the 10 with 100 $100, yeah, and we credit income statement.
Credit income statement is then account called income statement.
It's the plan, sir.
The first one was correct. Debit your depreciation. And your depreciation appears in your statement of profit or loss or income statement. You were correct with this one, 100,000. What do we credit? What's the account called? No, we credit it, but what's the name of the account? Hello, I'm waiting.
Plant.
Is it plant? If we credit a plant, it means we're removing $100 from the plant. You're missing something. Remember, accumulated depreciation, plant. That is the name of the account. All right. And then this is just to recognize depreciation for the year. Okay. So remember, you can't just credit the plant because the only time you credit the cost price of an item of PPE is when you actually dispose of the PPE. Let me prepare ledger accounts so that you actually have a picture of what it would look like. You would have an account. This account here, we're going to call this account plant, right? And at acquisition, on 1st of January, I'll just use 2001. We debited the plant. So on the debit side, we recorded that amount. So we have a plant with 1,000. And then on 31 December 20x1, we have another account. We call it accumulated depreciation. I'm just abbreviating just for the sake of space, but you don't have to abbreviate. So this will be on 31 December. We're going to credit the accumulated depreciation plant with an amount of 100, and the account that we would have debited is the depreciation account. So I'll have to put another ledger down. We'll have an account here called depreciation. Okay. We'll have an account called depreciation, whereby on 31 December, we debited the depreciation account. So on the debit side of the depreciation, this is the debit side. That's the debit side, and that side is the credit side. We debited the depreciation with 100, and we credited the accumulated depreciation plant. That was the account that was credited. So in order to get the carrying amount, the two accounts that we use are this. To get the carrying amount of the plant, the two accounts that we use is the plant and the accumulated depreciation plant account. These two are contra accounts. So the actual balance or the carrying amount of the plant will be 100 minus it would be 1,000 minus 100. So the carrying amount of the plant at 31 December would be 900. Do you have any questions for me? Okay, now I was just going to look at your answers. All right, so we haven't even looked at the question that was asked. So I've gone and done the journals for 20x1. Now, the question didn't ask us to do the journals for 20x1, but because I want you to have an understanding, I started with 20x1. The question asked you to show the journals in 20x2. Now, let us look at the slides, what it tells us. The engine of the plant seized up and was scrapped, and replaced on 1st of January 20x2. All right, it was scrapped on that day and it was replaced on the same day. The new engine was installed on the same day at a cost of 500. The estimated useful life of the new engine is 5 years. And then the cost of the old engine when originally purchased as part of the plant is estimated to be 300. What will you do now at 20x2? What will you do?
You record the one for the disposal for the plant.
Yes, you record that. So what journal entries will you pass? What journal entries will you pass now? What journal entry will you pass? You're correct when you say that you account for the disposal, but what journal entries will you pass? No one?
Is it not said debit disposal of asset and credit the plant, the engine?
Debit the disposal and credit the engine. Is that what we would do? Debit the disposal of the plant and credit the engine. Debit the disposal and credit the engine. Okay, so if we do that, what would be, how would we know? How would we know what, how would we know what values we have to attach to the old engine? How would we know what values to attach to the old engine? You've given me the debit, you've given me the credit, but how will you know what amounts do I allocate to the specific parts? No one. This is where the question came in here, this question. Okay, so at 31 December 20x1, we have, let me just do this for the plant as a whole. We have the cost price. The cost price was 1,000, and then we had accumulated depreciation. This was at 31 December 20x1. Okay, we just say 2001. We had an amount of 100. Okay, and the carrying amount, would be 1,000 minus the 100. Your carrying amount would be 900. Are we okay with that? This is for the entire plant. That was for the entire plant. Okay. But then what happened? We are only disposing of the engine. So if we look at the original engine, they told us, if we go back to our question, that the engine, the cost of the old engine, so this is the original engine, the cost of the old engine when originally purchased as part of the plant is estimated to be 300. Okay, so if the cost of the old engine was estimated to be 300, then we'd have depreciation on it. So the depreciation, since we didn't split the engine component, and it was just depreciated as part of the plant, then it would have been depreciated over the same useful life of the plant. And that was, what was the useful life that was given? The useful life that was given as 10 years.
10 years.
All right. So if we say the depreciation would be 300 divided by 10, we would get an amount of 30. So the original engine, the carrying amount of the original engine would be actually 270. Do we agree?
Yes, sir.
Okay, let's just do this. So the plant without the engine, then the carrying amount of the plant without the engine would be 100 minus the 300, which is the 200. Okay. All right. Are we together here? So the carrying amount of the plant without the engine would have been 630. So we're just splitting the components. We're splitting the engine. We're putting the engine separately from the plant. We're putting the plant and the engine separately. And the way to get the balance of the plant without the engine is just to take the entire plant minus the engine. You would get the value of the plant without the engine. So we need to remove the value of the engine from the books, right? So how do we remove that?
I think you minus like 900 minus the 270.
900 minus the 270. Yes, we're going to get to an amount of 630. That would be the value of the plant. Now that 270, what has happened to it? What has happened to that 270?
You removed it. It's
Yeah,
like
but
a loss.
it's a loss. Exactly. That is what I wanted you to get at. It's a loss because we had this value of this engine, but now we're saying the engine does not exist anymore. We have to remove it. All right. So this amount is called an impairment loss. This 270 is called an impairment loss. So what we're going to have to do, the journals for 20X2, so on 1st of January, 20, I'll just call 2002, we're going to have to debit an impairment loss for that 270. This 270 that we're getting rid of, that's the carrying amount of the engine. Okay, so we calculated it. So we debit the impairment loss, but we must specify the impairment loss of the plant. And then what account do we credit? We credit an account called accumulated impairment loss. We're going to deal with impairment losses. It's the fourth topic that we're going to deal with this semester. But for now, you just need to know the journal entry. All right. So we're dealing with an impairment loss, and we're going to say to recognize, it's just recognizing impairment loss on plant. So that would be your first journal entry that you are going to do. Okay, so let me open the ledger accounts. You're going to have a ledger account of your loss. So your loss will appear in the statement of profit or loss. This one, accumulated impairment loss, it appears in the statement of financial position. It's a negative asset. Okay. This accumulated depreciation plant also appears in the statement of financial position, and it's a negative asset because it works with the asset account. All right. So if I prepare my ledger account, I'm going to have another account. I'm going to have other accounts. Let me just copy this. I'll have accumulated impairment loss. and I'm going to have an impairment loss account. Let me just delete these so you can see it clearly. So the accumulated impairment loss was 270, and the impairment loss was 270. So here I'll put impairment loss. You don't have to prepare this ledger accounts, right? You don't have to prepare the ledger accounts, but I'm just preparing them just to show you that the plant account works with the accumulated depreciation. It also works with the accumulated impairment loss accounts. Okay, so in our plant account, the carrying amount, so we have our carrying amount of the plant was 900, but this was for the entire plant, right? It was for the entire plant, but then what happened as well? What happened? We accounted for an impairment loss. Are we together? We accounted for an impairment loss on the plant, and the impairment loss was $270. This impairment loss was on 1st January 20x2. So the carrying amount of the entire plant, the carrying amount at 1 January 20x2 would be an amount of 900 minus 270 is 630, and this is the amount that we have there, right? The plant without the engine, because we've scrapped the engine. Are we together? Hello? Are we together?
Yes, sir.
Okay. So now,
Yes, sir.
yes? Yes, go ahead. You're not going ahead?
No, sir, I said yes, sir, because like sir said, do we understand?
Okay, okay, great. So what I want to show you is that the value of the plant would be, I'll highlight it in the same color. That 100, we're going to subtract the depreciation, the accumulated depreciation of 100. We're going to subtract the accumulated impairment loss, and this will give us an amount, a carrying amount of 270. But since we have eliminated these amounts, we have to show that we actually eliminated it from the plant. So we should actually have this accumulated impairment loss will not exist anymore because we're actually removing it from the cost of the asset. The asset doesn't exist anymore. The engine doesn't exist. We have gotten rid of it, isn't it? So if we've gotten rid of the engine, we can't have an accumulated impairment loss because we've gotten rid of that. So we have to show it somehow that we've gotten rid of that. So how do we make this account zero, this accumulated impairment loss account? How do we make it zero? How do you make it 0? What do you have to do to a credit balance to make it 0? What would you have to do? There's no one. To make a credit balance 0, you're going to have to debit it, right? So we're going to have to debit the accumulated impairment loss account on the 1st of January 20x2. But what is the contra account? The contra account is the plant account because we're actually getting rid of the engine. All right. Debit that amount. The accumulated depreciation plant. What do we have to do with the accumulated depreciation plant? Are we getting rid of any amount from the accumulated depreciation?
Yes, say the $30.
The $30, yes. So we have to get rid of the engine component, the depreciation on the engine component, because it doesn't exist anymore. So we have to get rid of it so that the only balance that we're left with is the accumulated depreciation of the plant. So on 1st of January 20x2, you're going to debit the contra account will be the plant account, and the amount is $30. So now on the plant account, we've gotten rid of the 270 and we've gotten rid of the 30. So in total, that amount is actually $300. And this would be accumulated depreciation plus accumulated impairment. You can show them separately. You can show the 270 and the 30 separately. All right. So now the plant balance in the plant account, we're actually going to have a carrying amount of 700, which is the cost of the plant account. Sorry, will have a balance of 700, which is the 1,000 that we started with, minus the original engine now that we got rid of, which was 300. Okay, so the cost price of the plant account will remain with 700 because it's 1,000 minus 300, and then the accumulated depreciation. If we balance this account, the accumulated depreciation on the plant will remain as 70, which is 100 minus 30, which we've already shown. We did it in our original calculations up here. All right. The 70, that's 100, that minus that 30, that's how we got to the 70. So let me just prepare the journals. Okay, time is almost up. So on 1st of January 20x2, to remove the old engine, we debited the accumulated depreciation of the plant, that was $30. We debited the accumulated impairment loss, debited the accumulated impairment loss, which was 270, and then we credited our plant, which was 300. Okay. All right. So that is the second journal entry that we're going to have, and then the last journal entry will be to account for the new engine. Let's just go to the question. It tells us that the new engine was installed on the same day at a cost of 500. All right. So for the new engine, debit your plant, but this would be the engine component, 500, and credit your bank, 500, and your narration is just the acquisition of new engine. Okay, so time is up, but what I'd like you to do is just to prepare, the last thing is to prepare the journal entry for the depreciation at 31 December 20x2. All right, so prepare the journal entries for the depreciation at 31 December 20x2. That is what we'll start with tomorrow. You can go and read through. If you're using the new textbook, It's actually page 384 and in the new version of Gripping Up. All right, go and just do that example and read through the rest of the slides, and then I will see you tomorrow because time is up. Are we okay?
Yes, sir.
Good day, sir.
All right, good day. See you tomorrow. Bye.
See you. Bye bye.